All right. Hey, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's continue where we left off in our last video with these two charts, algorithmic charts from 2021 and 2025. We know that every 4 years, thereabouts between 3 to 5 years, price action algorithms tend to repeat themselves. Not cookie cutter, that would be too easy, right? We'd all be millionaires, billionaires. But the general trajectory on the macro repeats for the most part through various trading ranges and schematics, some of which guys like Richard Wyckoff delineated more than 100 years ago. And the patterns haven't changed. They still ring true today because humans are just as fearful and greedy as they were 100 years ago. So these waves that you see forming these distinct patterns are basically visual representations of fear and greed, and how it governs tradable assets in free market. So, and they're formed what we call the tops and the bottoms. And so, tops, of course, being distributions, and the bottoms being accumulations, and the in between reaccumulations and redistribution. So we go back in Bitcoin 4 years and we see that this is the macro cycle that we had for the year 2021. And so I like to keep it simple. We can get in and we can count all the Elliott waves and all the flats and zigzags and running flats and all of that stuff. That's not necessary, and it causes a lot of contention because traders and investors tend to focus to major on the minors, right? And count the flats, and your that's not a flat, that's this, that's that, that's not a 5 wave, that's a 3 wave, and miss the point of the technical analysis. So I didn't go ahead and number the Elliott waves. Instead, I did kind of like a pseudo Wyckoff on these. So when I mean by Wyckoff, the 3 main points of each trading range, we have the preliminary. So this is a top, so this is the preliminary supply, the buying climax, and the automatic rally. And between the buying climax and the automatic rally, or the automatic reaction, is where we delineate, or where we confine the support and resistance of every trading range. So for all intent and purposes, this is the top, and we'll call this subcycle A of 2021, since there were 2 tops in 2021. Now remember, this is 4 years ago. So on this, we have like a 4-point. What I like to call it a 4-crown. So I think of these as crowns. The first is the buying climax. We could call this next one the secondary test, and maybe like this, like a UTAD, and this an LPSY, if you wanted to get technical with the Wyckoff. The point is, there's 4 crowns on this, and then we had an ABC correction and then an accumulation here. And this took place back in June of 2021, and then it put up another leg, and then we had a whole other cycle start, which culminated in subcycle B. And so we had this double horn top here. And what these basically are 2 head and shoulders. So this is the left shoulder of subcycle A, the head, and the right shoulder. And then it put up, instead of distributing, it bounced off this macro support line, this large macro support line, and then we had a whole other system begin with the left shoulder and the head and the right shoulder. Now I played the replay bars. I stopped it right here to kind of get it to where we are right now in the current. Remember, this is 4 years apart again, and the waves are replicating. Okay. Now, just because the waves replicate and the fractals play out algorithmically, it doesn't mean that the extent or the breadth, the length of the waves are the same. It's when I say that the patterns repeat themselves, it's in the macro trajectory they repeat themselves, unless we get a black swan event or something cataclysmic as such. But the macro trajectories are always really the same, barring those extenuating circumstances, those special events. So we really didn't have anything, but like we see this pattern here. This is actually this. This is a replication of this. This is basically a head and shoulders. It's just, it's hard to see, and it can masquerade as like a bull flag almost. But really, this is a if we count the waves, which I did. Again, I didn't enumerate the Elliott wave because I don't want people coming on here and saying, oh, that's not right, that's a 3 wave, that's not a 5 wave, that's a flat, that's not a zigzag, and miss the whole point. So in order to avoid all that, I just kind of put my own features on here to identify the key events. So again, we have the PSY, this is the preliminary supply, this is the buying climax, and this is the automatic rally. And then we have the 4 crowns here, like you see here. Now, if you look at this carefully, you'll see all the waves are there. All the waves are there. They're just condensed. They're in different kind of truncated forms, and some of them are extended, some of them are truncated. But technically, it is a 4 crown here, and even the lows here, the signs of weakness correspond. Here's the A and the B of the lows of this macro distribution. We have the A and the B here. Here's the buying climax. We could call this area like the secondary test area. This could be like an up thrust, and this could be the LPSY, kind of like if we were to draw the same coordinates off that. And then we had the markdown here. This is that markdown. You could see the clear markdown. It's not as prominent as it happened 4 years ago, but it retraced back down into the macro support zone. And then we had this area here, this bottom, kind of like a 3-horn bottom here. We have the same here. We even have this structure. So this lower wick here, that's this, and then we had this kind of like this hypodermic kind of structure here. That's this, and then it came down. It's kind of like an inverted horn bottom, kind of, what the single bottom looks like. This is kind of like flipped on its side. It's actually kind of like, you can see like the 2 horns on top, kind of like a double top. And if I blow this one up, you can see the 2 horns on this one as well. So this was, in both cases, this is the right shoulder of both of these structures. This one's just flattened and more distorted. But like the lowest point here, we can call this like a deep spring or terminal shakeout. And that's where in both of the cycles I anchored the volume weighted average price, the VWAP, or what I like to call is the ICE. And then that started the whole new, the second subcycle B in both cases, or the second head and shoulders, which we had here. This here is this here. This is just more extended out. It's more accentuated. It's higher above the ice, but it is above the ice. In both cases, we have this shoulder playing out atop the ice that we anchored to the terminal shakeouts in both. And then this came up and this started. This was the Trump pump that we had, and we anchored the second VWAP, or the second ice, to the PSY area of subcycle B in both cycles. And so we had this diamond distribution. We had a double top here. We have a double top here 4 years back, and the regression trend coming from this second mitigation of the high, or this UTAD, has been largely the same. In fact, this is what we've been following since January, and it's kept us all safe when others are going long and getting destroyed. We were making bank because we were going off the algorithm, right? We're going off the algorithm in the fractals. So in both cases, we see the placement of the 2 ice barriers are the same. They're similar from the same sources. So this brings us to where we are now. We see on this top ice, this light blue ice, this final markdown from the diamond structure where the bulls couldn't get back over the ice, and here it couldn't get back over the ice. We marked back down to the macro support zone, and we fell through the second ice barrier as well, where we have series of redistributions. The second redistribution here, where we are right now, you can see it clearly. This is the major markdown. That's the major markdown. Of course, we had the lower wick come down 4 years back, was more extended, but both wicks reached into the macro support zones, and we have another redistribution playing out to where we currently are now with this, which could be a UTAD coming up. In any case, it's like a mini wedge, I guess. If we shrink the time frame even more, I could probably make a rising wedge out of this on the end. But it's coming up, and it's looking like it's not able to prevail over the second ice barrier. Now, in 2021, we see how it played out, and we had a liquidity run up here, and then it took out the stops, and then we retraced back down into the macro support, and we broke through the macro support. And are we going to make any more attempts at the ice from here? See, now what we're trying to figure out is if we're going to accumulate here and have a bottom, or if we're going to keep distributing like we did in 2021. And so yeah, so now this is macro distribution. I'm going to pause this now. And so the important thing to see is that after when it fell back in, when the price action fell back into the macro support zone, it didn't look like there were any more attempts at the ice. We did have the shoulder play out, kind of like it's playing out here, but from there it was curtains going down. So, and that makes sense because in this range here in 2021, this was a markup of some 600% markup from down here at the lows to where B topped out in subcycle B. It was about 600%, and it's been 600% from 16,000 to where we topped out in this cycle at $109,000. So I mean, we're prime for a distribution. We don't know what's going to happen, but by sticking close to these schematics and being guided by these two ice lines as we continue to watch how 2025 subcycle B plays out. I'm going to be monitoring this on both the macro and micro time frames with volume spread analysis, and I'm also looking at some of the fundamentals about Bitcoin. Open interest is dropping, OI is dropping by 35%. Analysts predict sideways movement. Well, this would play into the right shoulder of the head and shoulder macro that we're looking at. Remember, the sideways movement should play out in that macro support zone on the bottom. Bitcoin price analysis, bearish setup sustained. So I mean, things aren't looking terribly bullish, are they? And then we go to this is Bitcoin dominance. So what we want to see, if we're going to go down, or if we're going to start consolidating down at these support levels, then what we want to see is Bitcoin dominance falling. Because if Bitcoin dominance falls, and that may be good news for us who are keen on swinging the altcoins. Everywhere where we see this yellow circle, this is where previous altcoin seasons happened. You see that they all happened back on the pullbacks. This one goes back all the way to 2019 on the pullback. That's on a pullback. That's on a pullback. That's on a pullback of dominance. This is all along the support line starting in May of 21. This was altcoin season. This was altcoin season. This was altcoin season. This was the altcoin season we just had back in, what was it, December? The first week of December. It wasn't long. It was like a 1 week window, but that's when all the alts were flying. Pepe and Bonk and all the meme coins were flying, and we made a bunch of money. And then as soon as it started, it was over. But the point is that it's formed up here. It looks like it's topped out at this resistance line here. And this would play right into our hands if Bitcoin, if Bitcoin's not able to get back over the ice that we just looked at on the macro and fall back down, say, into the 70s or even into the upper 60s and begin to consolidate, we may very well see this rising wedge on the market cap dominance fall and come back down and mitigate the support line. And traditionally, that's when it's retouched to support. That's usually when the altcoins rev up. We look at the it looks like Demand is decreasing as the price is increasing. It's hit supply. It's hit the resistance, and we're seeing decreased demand. That's usually a sign of weakness. It's usually a sign that that this is going to come back down and mitigate the support line. So if we have so this would be a secondary test, create a secondary test coming down, kind of like it did here. Plus, this is a very, very high demand spike in the vertical bar, and we didn't. Usually when you see something that's above average like this, as it's approaching a resistance line, and we see it top out like that, that's usually a sign that it's about to come down, that supply is going to come in and take it back down to mitigate whatever low it came from and take the liquidity there. Of course, this is dominance. This isn't an actual asset or crypto. It's just the Bitcoin dominance. But we saw another very larger than average demand spike here, which brought it back down to support level here. This was larger than average here. This is larger than average here. So this is larger than average. And so I think we're going to, if this thing just continues to play out with the patterns, then we could see, yeah, you see like demand decreasing here, always decreasing after a high on a pullback, coming back down. And that's when we see alt season possibly emerge or reemerge. So going back to that, yeah, if we create this second shoulder like we did here, assuming that this doesn't mark up from here, if it does mark up, it still has to get past this first ice that's anchored to the preliminary supply of the macro top. I don't see that doing that with all the bearish sentiment right now in the world. It's just everything's looking like geopolitically almost like a, like an like we may be on the verge of an economic recession. And indeed, some analysts think we're already in a recession. But it just remains to be seen. We haven't seen any macro corrections yet in Bitcoin, and we have gone up from 16,000 to 109,000 without in just a dual cycle, kind of like we did in 2021. Same metrics. So far, it's followed it pretty much tit for tat. So we'll see what it does here, but I'm going to be watching it carefully. So until this changes, until the fundamentals change, I'm still going to be bearish on Bitcoin. I'm looking at somewhere around 69 to 70. That should bring us down in here underneath the micro, or rather the macro support line, and then we'll see if we're able to reaccumulate and make some more attempts at the ice, or come down as a proper retracement, as a proper macro correction down into perhaps the 60s or even the 50s here. In any case, we'll be doing VSA all the way down. So make sure you're subscribed to this channel. I'll keep you safe. Better yet, if you've watched this video all the way to this point, check out our Discord trading group. We keep it extremely affordable, and yeah, learn to read charts like this. Learn about the algorithms. Learn price action, volume, trend lines. It's really all you need. Anchored VWAP. Get rid of a lot of those indicators that really all they do is show you what's already on the charts. Learn price action, learn volume, learn about the algorithms, learn about where the liquidity pools are, and go back and find the fractals, and then identify the areas of liquidity. It'll help you sleep at night. Even if we get pumps or dumps, those are usually liquidity runs. Those are usually traps. And it just takes out the liquidity on the top and on the bottom, and then it continues on whatever the governing trend is. In this case, it's a bear trend. It's a downtrend. We're still in this regression trend from the all-time high. Same here. We're still in this regression trend until this breaks. So it's pretty much a no-brainer what to do. But if you're interested in, say, momentum driving or scalping the waves, there's plenty in the group that do that. And anyway, it's just a real fun, approachable community. Check us out. I keep it extremely affordable. And with that, I'm going to take off. I'm going to go. Got stuff to do. It's been real. Thank you. It's not financial advice. May God bless each and every one of you always. Yeah, so stay tuned. We'll talk to you soon. Bye-bye.